Welcome to Speidel's California Minute. I'm your host, Catherine Sedan. This week we're covering the refund intercept programs the FTB uses when a taxpayer owes money to another agency. To stay up to date with California tax law changes, subscribe to Speidel's California Tax Letter. This monthly newsletter is written in plain English with helpful examples and charts. For subscription information, go to speidel.com and click Publications. If a client doesn't receive their state or federal tax refund, it's possible it was taken to pay another debt. The State Interagency Intercept Collection Program requires the FTB to determine whether a taxpayer has a balance due to another government agency and redirect part or all of the taxpayer's state tax refund or lottery winnings or unclaimed property disbursements to pay the debt. State tax refunds can be reduced to offset taxpayer debts for parking citations, tolls, bad check fees, tuition, and various other fines. Personal income tax refunds generally cannot be offset for taxpayers who received the California Earned Income Tax Credit, Young Child Tax Credit, or Foster Youth Tax Credit. If the FTB takes part of a taxpayer's refund to satisfy another agency's debt, they'll send the taxpayer a notice explaining how much was taken and sent to which agency. If your client disputes the other agency's liability, they need to contact the other agency, which is listed on the notice. They should not contact the FTB. Refunds may be offset for debts owed to other agencies only after all existing FTB tax debts have been satisfied. Any FTB refund will be used first to pay use tax reported on the FTB return, then any prior year FTB taxes. If a taxpayer owes more than one agency, there's an order of priority that determines which gets paid first. If a higher priority account is paid in full, then funds are directed to the next priority agency. The process is repeated until all accounts are paid or until all offset funds are exhausted and any leftover amount is refunded to the taxpayer. If there are multiple identical priority accounts, funds are directed to the account with the largest liability. If the refund is intercepted and the taxpayer already paid the debt to the other agency, the overpayment will be refunded by the other agency within 6 months. The Multi-State Offset Program authorizes the FTB to enter into reciprocal collection agreements with other states to offset refunds to satisfy the delinquent income tax debts of the other state. Currently, the FTB has agreements with the New York State Department of Taxation and Finance, the Connecticut Department of Revenue, and the New Jersey State Department of Treasury. If the FTB is going to intercept a federal tax refund, the taxpayer will receive a notice and they have 60 days to pay their state tax liability and avoid the offset. Even if a taxpayer has an offer and compromise plan in place or is making installment payments, the FTB generally continues to apply all available refunds and offsets to outstanding balances until the balance is paid. Taxpayers who have their federal income tax refunds intercepted by the FTB to pay all or a portion of any delinquent state income or franchise taxes are charged a $22 collection fee. The FTB imposes the fee for every offset, which means a taxpayer may have more than one fee imposed. Speidel's analysis and explanation of California taxes is the most complete and best-priced California tax guide available, and it includes periodic updates for major changes that happen during the year. You can order the 2026 edition at speidel.com under Publications. That's all for this week. Join us next time for another episode of Speidel's California Minute.